Do you guys remember what they were saying about Tesla stock 6, 7, 8 months ago? They were saying their stock's going to $50 to $60 a share. Do you remember that? Does anybody remember that? Does anybody remember that? Let me know in the comment section if you remember that. Everybody's talking about it's going to $50 to $60 a share, right? It never happened. Not only did it not happen, it never even got remotely close to that, okay? It bottomed out a little over $100 and then just started going up and up and up from there, right? And I know some of you guys got to take advantage of that insane opportunity we got really in the third quarter and fourth quarter when it came to Tesla stock. And it's an extraordinary situation, right? Because you look at a stock like that, the stock price was down 70% roughly. 70%, and it wasn't enough. And this is one of the greatest companies, one of the greatest stocks in the entire stock market. And it was down 70%. And for a lot of folks, that wasn't enough, right? It was never enough with Tesla. Even if it went to that $60, $50 range that people were so convinced it was going to, it still wouldn't have been enough. People would have been saying, oh, I'll wait to go to 30 to 40. When you got the greatest companies in the world giving you 50, 60, 70, 80% discounts, and I preached this to the end in 2022, and hopefully it got through to some people. Some others, I don't know if they ever got that memo. You got to take advantage of those. How often do you get those opportunities? I can tell you how often. Usually every 5 to 10 years. Sometimes you have to wait longer than 10 years to get an opportunity where the greatest companies in the world see their stock prices decline 50, 60, 70, 80%. It is extremely rare. And when you get it, you better pounce, because otherwise you'll look back in a few years and be like, oh man, remember when I had a chance to buy Meta under 100? Remember when I had a chance to buy Tesla at $100? And you start to look at these things, and as time builds on, more and more people realize I was wrong, and I can either jump on now or I can continue to wait, right? And maybe the stock's back at an all-time high later this year or next year, right? Which all-time high for Tesla is over $400 a share. It's $277 today. That's where people get into some problems here, right? You look at a stock like Palantir, and Palantir has been fascinating to me, because Palantir should be the ultimate kind of Wall Street stock. Palantir is a company you really need to go down the rabbit hole. You really need to do extensive research into their products, why their products matter, and all these sorts of things. And who's got the sort of funds, the sort of money to research something like that? Well, it should usually be Wall Street, right? But Wall Street decided to not spend the time researching Palantir. They made that conscious decision to not spend the time really researching Palantir, right? And as the stock just sold off more and more in 2022 and went all the way down to $6 a share, it was only the retail folks, the smaller investors, the people that have a portfolio of $50,000, $100,000, $25,000, $250,000. It was those folks who actually spent the time understanding what Palantir had going on. The financials, how the financials would flip, the products, why they were such game changers. And now all of a sudden, the story's starting to come together, and now all of a sudden Wall Street's keyword is starting to hop on this bandwagon, when they refused to do any of the research work necessary to be able to see where things were going in the future, right? And you look at a stock like that, right? And now, obviously it's going where it's going, right? And we'll see where the numbers shake out over the next few quarters with Palantir. But the thing you got to understand about Palantir's stock price is, if Palantir comes in and they have good guidance, strong guidance, they beat numbers very nicely. Do you know where the stock price is going? It's going to $22 after earnings, if they come in and really have very strong guidance and they beat numbers, let's call it by a pretty substantial margin, which I think is a potential. Now, if they come in bad numbers, it's not going to 22, okay? But I can tell you, if they come in with strong numbers and strong guidance, 22 plus, we're going to be there. And that'll happen quick. And that was a stock that was $6 last year. Okay, and so these are important things to kind of factor in here, that Wall Street never even considered this, and now all of a sudden they're considering. That's why the stock's moved. It hasn't moved because of retail. Retail was buying last year. Not to say no one from retail is buying this year, but they're not pushing that market cap anymore. There's a market cap that's tens of billions of dollars now at this point in time. The money that's coming into Palantir is big money now at this point in time. Oh, by the way, S&P 500 inclusion still coming down the road. We haven't even got to that stage yet. Oh my gosh, can you imagine when that comes? Woo, baby, are things going to get fun there, right? Now, S&P 500, NASDAQ closed at their highest level since April of 2022. Obviously, with inflation coming in better than folks expected, that was massive, right? The consumer price index increased 3% in June relative to a year earlier, a slowdown from the 4% in May. That's It's a 50% slowdown, okay? 50 flipping flapjacking percent. That's massive, right? Now, you got to understand, like Wall Street, from what I saw, Wall Street was pretty much around 3.1% on average. So we came in better than expected. But that's actually not the bigger factor. The bigger factor we'll get into in just a moment, okay? The CPI is a key barometer of inflation, measuring prices of everything from fruits to vegetables to haircuts, concert tickets. June's reading is the smallest 12-month increase since March 2021, around the time when alarm bells started sounding about the fast-rising prices of Rona era. A significant pullback from the 9.1% in June of 2022. And just to be honest, all of 2022, we saw ridiculous numbers, so we got much easier comps. Now, to put into detail where we have problems and where things are looking good, okay, these are things that are holding us back. And in terms of getting that CPI down even more, motor vehicle repair, 20%. As somebody that just paid $3,000 for my Model S plaid tires. Frozen vegetables. No wonder that frozen vegetable company went under. Frozen vegetables, 17% up on a year-over-year basis, right? Motor vehicle insurance, obviously up almost 17%. Part of the reason is vehicles have obviously increased so much in price over the past few years that it's more of a risk to insurance companies. If, vehicles are just more expensive, like you're going to have to pay more insurance. Like if you got a Lamborghini, you're going to pay a whole lot more for that insurance than a Toyota Corolla. That's just simple math, okay? Candy and chewing gum, seriously, up 13%. Pet food up 12%. Leased cars and trucks up 11%. A lot of these bigger things, these are what I call catch-up plays. And basically what that means, and this is very important for everybody to understand this, is transportation in 2022 went to the moon, okay? I'm talking about if you're shipping from overseas, if you have to truck things around. And so a lot of these companies that have to ship bigger products got absolutely screwed in 2022. Now, they've all gone up on price over the past 12 months to compensate for what they were paying for trucking, fees and everything transportation-wise. Now, transportation's fallen through the floor over the past, specifically really like the past 9 months or so. So pet food, yeah, it's up considerably, but it doesn't have to go up anymore now at this point in time. And the reason it doesn't have to go up anymore now at this point in time, you don't have to keep pushing price, is just because no one in that space has to do that anymore now at this point in time. So if they do that, their competitors will take market share. But the whole space did it because you transport a big bag of dog food around or whatever, right? Yeah, it was substantially expensive because trucking rates were so ridiculous in 2022. Those days are long gone now at this point in time, okay? Leased cars and trucks up 11%, bread up 11%, sugar up 11%, okay? Now, calling it mid factors, carbonated drinks up 9%, rent of primary residence up 8.3%. Get ready for that baby to keep going down, okay? Let's put it that way, especially as inventory continues to loosen. Wine away from home was up 6.7%, postage up 6.7%, electricity up 5.4%, food at home up 4.7%. Now, in terms of things that are going down, recreational books down 3.1%, used cars and trucks down 5.2%, eggs down about 8%, television down about 10%, bacon down about 10%, major appliances down about 10%, car and truck rental down 12%, and then obviously energy. The one I thought that was weird was health insurance down 25%. I don't know what they're taking into account there. I don't know if there's some sort of government program. I don't know, but I thought that was the weird number. Most of them I can kind of wrap my head around. That's the one I'm like, I don't know about that, okay? All I know is my health insurance is probably more expensive than it's ever been, okay? Now, this is all, obviously good news. We still obviously are not where we need to be. CPI needs to obviously get to the 2s, which is where the Fed wants it. But the fact that we're down to 3 is great news for us, okay? And that's not even the best news in just a moment. But in terms of should this trend continue, likely, yes. We should likely be CPI, I would say, in the 2s, obviously, next month. It's just a question of, is it 2.9, 2.8, 2.7, 2.6, 2.5? So everything's really going our way in terms of where we need it to go in terms of inflation. This matters for the stock market in a significant way. The reason this matters in the stock market in such a significant way is a few reasons, okay? And the first one is, obviously, inflation hurt the consumer in an epic way in 2022, and that's why we saw consumer confidence go to the lowest we've seen it in terms of Michigan consumer confidence in history, right? So obviously inflation coming down helps the consumer out. The second reason is it makes the Fed likely not have to continue to increase rates forever and ever, which takes the Fed scariness out of it, right? A third component of this is companies don't have to deal with this insane inflation and have to keep this kind of like wage price spiral going, which adds more stability for the market overall, okay? So, and there's other various reasons why this is good, but those are just some of the big ones that come off the top of my head. So bottom line is this is why the stock market's up very nicely here today, okay? Now, the even more important thing is, this is even more important for a lot of folks in the market, is a measure, so-called core CPI, hit a 20-month low of 4.8%. Now, this gentleman says, Capital Economics, he says, potentially even more encouraging than it looks, as wholesale auction data from used car points to a sharp decline in prices over the next couple of months, he said in a research note, right? Now, you know, core CPI is something that a lot of people have been looking at as like the one scary part. They're like, well, CPI is coming in, you know, cool, but core CPI is still running too hot. But it looks like core CPI is going to fall quite dramatically over the next few months as well, which basically, you know, you don't really have much to go off of. Like the bears are running out of things here, and bears were expecting core CPI to be in the fives. Like every single bear pretty much out there was expecting core CPI to be somewhere in the fives, and to come in at 4.8% is definitely welcome news. So, you know, the bears are just running out of ammo here. That's the best way I can put it. They're just running out of ammo. Like everything's working against them time and time again.